Since 1987, we've helped investors navigate the markets using technical research focused on relative strength, supply and demand, and momentum. From sector rotation to asset class rankings, we highlight what drives performance. NASDAQ Dorsey Wright, helping you stay one step ahead.
Hello, everyone, and welcome to this week's NASDAQ Dorsey Wright podcast from June the 24th, the day we're recording this. I am joined today by Trevor Plesko, my colleague. How are we doing today, Trevor?
Doing all right. It's nice and sunny here in Richmond, Virginia. Can't complain too much, and always a pleasure to have you on.
Yeah, always good to be on. Always good to be on. I have varying backgrounds sometimes. This is one of the crazy ones they give me. I chose it just because I like records. But, one of the things we've got a lot to talk about today. Really, the couple of big themes that most people will probably unsurprisingly be hearing is some of the pullback we've seen in equities, at least sort of starting this week. And then from there, sort of what's happened under the hood there. But also, we'll probably talk a little bit about emerging markets too. So those two main themes, most people would probably assume we might touch on them, but we'll kind of take some varying lenses into what we'll be looking at with those two being kind of major themes. But as we noted, broadly speaking, we have at least seen through these first couple of trading days this week, again, we're recording this on Wednesday, we have seen most equity indexes take a step back. And it's one of those things where it's been a little bit of an interesting driver under the hood that we've seen while the market's taken a step back, what's been going on under the hood of the indices. And you were taking a look at that in a piece earlier this week, weren't you?
Yeah, just for some context on some movement over the last week, surprisingly, S&P 500 only down about 0.75% from last Wednesday. And when you look at the equal weight S&P 500, so the kind of average S&P 500 stock, actually up about 0.5%. It's really just been a lot of those mega cap names in the indices driving things lower, where if you look at the NASDAQ 100, down about 1.6% over the last week. NASDAQ Composite also down about 1.9%. Notably seeing some small caps actually up about 2% over the past week. But again, some of those international names also taking a hit. But like I mentioned, a lot of the downside coming from some of those mega cap areas. And just kind of continuing that theme, did put out a piece recently on kind of my Magnificent Seven and some of those larger mega cap names, if you want me to pull that up real quick. But specifically, it's been a pretty great year for domestic equities, especially among growth areas like S&P 500 up about 7.5%, NASDAQ 100 up 15%. And if you look at XLK, that Select Sector Spider Fund for technology, also up about 25%. So, David, if I told you that at the end of last year, maybe, how much do you think the Magnificent Seven would be up at this point, maybe about halfway through the year?
Mentioning some of the numbers you've mentioned and given sort of that history of the past 2 years, one would imagine they're up significantly as well.
Yeah, surprisingly, when you look at Magnificent Seven, specifically through the lens of that Round Hill Magnificent Seven ETF here, is actually down 4% year to date. Pretty notable divergence from a lot of those other technology and mega cap names, and wrote a little bit more color on that in this piece here. Did a little chart update on MAG's ETF there. Did notably reverse down into a column of O's here recently. Now almost about 10% away from all-time highs. Without a ton of support till that $56 level. When you look at how the kind of Magnificent Seven have done over the last 6 months relative to the NASDAQ 100 itself. So how those 7 companies done relative to other mega cap growth companies. They've actually underperformed the index over that kind of half-year span by about 20%, which would be its widest margin ever of underperformance. Really only a handful of times in which you see those stocks underperform the index at all, let alone by such a wide margins. So really, we haven't necessarily seen the upside recently come from a lot of those Mag 7 and kind of the largest companies out there. TD used to talk about kind of the dynamic between the generals and the soldiers, where sometimes you have the generals leading the way, sometimes you have the soldiers, but recently it has been kind of the soldiers or the average stocks pushing higher, where some of those generals have been more kind of been laggards or more so muted over the last 6 months or so, whereas the upside has been coming much more heavily from the kind of average stock. And then this was just kind of an update on some of the individual names within the Mag 7. So, I mean, really, when you look at how they've done over the last different periods here, only a few of them or a handful have actually outperformed the broader market. So none of them have outperformed the NASDAQ 100 over the last 90 days. When you look at kind of their overall strength there, Alphabet, Amazon, and Apple, only ones with kind of a positive attribute. Tesla previously was there, but is now more of a hold. And when you compare some of these names to kind of the other 493, the XMAG ETF, the Defiance Large Cap XMAG 7, so essentially the S&P 500 removing those names, up about 12.6%. So really seeing a lot of those other names outperform the Mag 7 space here, and really has been kind of surprising given how strong technology is. But we've also seen that group pull back a little bit. But know that was a lot of context there on that piece. David, do you have any kind of initial thoughts after taking a look at that?
No, I mean, the intriguing piece is the fact that we are sort of seeing that bit of divergence between equal weighted and, again, that conversation around the soldiers versus generals. But to your point, hasn't really slowed down for the broader tech space. So we've sort of seen
Definitely.
that theme continue in many ways. And, just in the short couple of days we've had this week, we've seen some negative action, especially focused within that tech space. In many cases, what we're seeing is this is pulling a lot of those either funds or individual stocks back from recent rally highs or all-time highs in some cases. In the case of like taking a look at the chart of XLK, we did see it give a second buy signal there earlier this week at 194 before ultimately reversing down and giving a sell signal yesterday. At this point, with it still being near those highs, the fund score still being significant near that 6 margin there as well. Not an individual, a single sell signal isn't something that's really too much to worry about at the moment, but definitely is going to catch our eyes, especially because of the recent run we've seen out of that tech space. So kind of giving us a little bit of a hint of consolidation here, which may give some opportunity, may give some pause as well. But that's sort of one of the initial themes that we sort of see connect with that soldiers versus generals conversation. And then ultimately the fact that we've just seen that broader improvement out of some of that tech space, but definitely been a lot of focus around one theme though, for sure.
Definitely. I think it's been interesting to see some of the movement kind of underneath the or behind the scenes of technology. Seems like everybody's been talking about semiconductors for good reason recently. Did also see a little bit of rallying from some of those software names, but really those have been some of the names now driving the way back to the downside, kind of failing some of their recent breakouts. So if you look at something like IGV, that software ETF or representative, was previously back above a fund score of 4, more in solid territory, but now back on 2 consecutive sell signals, almost moved back into a negative trend there. So definitely seeing a significant amount of deterioration within a lot of those software names, driving back some of those recent gains. I mean, granted, was in extremely overbought territory, especially some of those cybersecurity
along with a lot of
names.
things for sure.
Yeah, I mean, I think that's been a good explanation for why we've seen a little bit of pullback, whether it's for technology or emerging markets, which we might touch on here shortly, definitely were in extremely overbought territory. Often, and especially in like May and early June, it just seemed like they just kept getting more and more overbought and it would never stop. But finally seen things return to a little bit of normalization. So if anything, some of the recent pullback, especially for some of those higher relative strength names, could just be a bit of a healthy exhale as things kind of return to normalcy. But definitely here for IGV, some significant weakness here. Want to watch that bullish support line, see if it moves back to a negative trend. But broadly speaking, probably some other stronger areas of technology, I mean, namely semiconductors. Looking at some other representatives, SOX here, the semiconductor ETF, near perfect fund score of 5.97. Has seen a little bit of pullback here, but still on that buy signal there with a break of the double top at 590 and pretty
And
consistently has
still up
moved
more
higher.
than 100% for the year, too.
Yeah, I mean, it's just absurd the performance we've seen from some of those semiconductor names. I mean, continue to be some of the strongest areas of the market, albeit with some extreme levels of volatility, as you saw with some of the pullback here over the last month or so, before kind of reversing higher. Especially kind of when it initially had that sell signal there and then reversed back up. So a bit of an interesting picture. We'll see where things head from here. But I mean, some of these semiconductor names, I mean, really have shot up, and it hasn't necessarily just been on the domestic front either. I know we've talked a little bit about emerging markets as being kind of a beneficiary, surprisingly, from some of the ascent in technology here, and has seen a little bit of a similar picture to that of technology, just kind of shooting up. So here, taking a look at EEM is that emerging markets iShares funds, and I don't know about you, but this looks like a pretty good chart to me, David. What are your thoughts on this here?
Yeah, I mean, hard to argue with the chart where you've seen 6 consecutive buy signals and pulling back off an all-time high. I mean, not like we've kind of talked about
Mhm.
with even sort of the tech pullbacks that we're seeing apart from really software. A lot of this is coming back from highs. These fund scores are still in really strong territory. Ultimately, in many ways, this is the pullback or that exhale or consolidation that we feel like we've been waiting for what maybe a month or longer. So,
Mhm.
I think we're starting to see that, and the technical picture still remains sound. So nothing more than what we're seeing right now than those pullbacks for the time being, and maybe some initial sell signals, but really the technical picture, broadly speaking, for a lot of the tech and sort of that emerging market space, broadly speaking, still maintains for the time being. Um,
Yeah, I mean, it is pretty surprising. I mean, yesterday we saw almost 5% decline for EEM, and still, even with that pullback, I mean, the last time we saw a sell signal for this fund was April of 2025. So it's been over a year where it's kind of been consistently on buy signals, consistently moved higher. But I know our friend and colleague, Ian Saunders, head of the research team these days, did put out a little bit of context on EEM and emerging markets and some of the recent performance. If we want to dive into that, where did see emerging markets relative to developed markets are on some of their strongest runs, historically speaking, over the last 15 years. Really would have to go back to about 2008, if not farther, until the last time we saw emerging markets have this strong of a kind of performance over the last 6 months relative to developed markets. I mean, it's been pretty incredible here. I mean, looking at this chart here again, last time was about 2008. But a lot of this has to do with just what's in some of those emerging market funds, which seen a little bit of an uptick in the technology exposure that they've had. I think one of the graphs here shows the exposure to technology versus finance. And if you look at June of 2025, actually had more financials exposure within EEM. For in terms of kind of the sector exposure, whereas today that number does sit at nearly 45% for technology, whereas financial is only about 20%. So a lot of those semiconductors or memory names have kind of played a larger role in the performance of EEM and emerging markets. And with those kind of having such an extremely positive year, definitely has been a tailwind for the broader emerging market space.
Well, and what's interesting is when talking about EEM and even some of those other emerging market funds, one of the regions where I think you've seen the biggest impact of this, sort of that changeover from heavy was the focus in finance in terms of sector exposure to now tech
Hmm.
is definitely within Asia Pacific. You know, whether it's looking at Taiwan, I mean, even if you look at EAM right now, TSM, Taiwan Semiconductor, is the biggest stock within EAM. So not only Taiwan, but South Korea being a big contributor there as well. Both of those really sort of seeing that transition from heavy financials to really much more of a focus in tech. Now, it's not been just like that happening overnight. It's definitely been a slow
Been
roll as
somewhat
we even see
gradual,
it.
but I mean, relatively speaking, it's been pretty insane looking at some of those Taiwan and South Korea markets. I mean, especially South
Hmm.
Korea. I mean, I know Micron's had a pretty crazy year, and it's kind of one of those big three memory companies, but the other two both located there in South Korea. And so SK Hynix and Samsung both had pretty astounding years so far, and that's definitely bled over into the performance for the broader South Korea ETF. I think you mentioned, is it up almost 100% year to date? Let me pull that up real quick.
Just shy of 100%. EWY, that iShares MSCI South Korea ETF fund score still above 5. Still up 100%, almost 100% for the year. Did see it pull back 12% during Tuesday's trading, but has swiftly rebounded today during Wednesday's trading. So even with the case with EWY here, we saw a pretty significant exhale out of it, really bringing it into that threshold of actionable territory, or kind of right around there. And then ultimately, as soon as we see that type of exhale, it's now rebounded back right towards that $200 level on the chart. So have seen, significant volatility within it as well, but continues to maintain what's been a pretty strong uptrend and strong technical picture.
Yeah, I mean, it's just pretty amazing here. I mean, I think it's also notable, kind of reversed up right by some of the previous resistance here, around 192, 190, 194. So it could kind of be a potential area of consolidation looking forward here. And like David mentioned, pulling back from some pretty heavily overbought territory. So, like we've been saying, could be kind of a healthy exhale for the region there.
Yeah, trading in the 190s this week, actually, for at least more than one day, could probably be helpful. you
Hmm.
know,
Honestly, yeah.
um, and that would, I think, be not only a theme we would discuss within probably quite a few emerging markets individually, maybe broadly speaking, that seeing some of this consolidation into more actionable levels as far as when we're looking at those weekly distribution curves is helpful in many ways. It takes what was probably a month or a month and a half ago of frustration, feeling like you were chasing your tail as the market was rallying, to now we're getting that exhale and really getting a moment to catch our breath and say, okay, where's leadership maintaining, which, as we've really touched on, still continues to reside within that semi space, even looking elsewhere globally, emerging markets still maintaining that strength as well, seeing sort of that AI theme sort of being an overarching piece for a lot of this. So that'll be interesting. That we'll continue to monitor that throughout the rest of the year. But for the time being, we can sort of be happy in the fact that maybe we're getting some opportunity to get in some of these leadership areas.
Yeah, I mean, those have been some consistent areas of strength too for several months now. So it is nice and has been kind of a tailwind for some of those broader momentum strategies to see some of the consistent price action here for some of those leaders of the market, whereas some of those laggard areas have kind of continued to be those kind of dogs. But I know one area that's has been a little bit on a downtick here over the last month and the last week in general has potentially been some of those commodity areas or some of those material areas. I think over the last week we saw from crude oil that was down about 7.5%. Gold itself was down about 6%, and then silver actually down about 15, if not more, over the last week. So have kind of continued to see a little bit of downside here following their ascent earlier this year with some of the Iran conflict driving up, especially oil prices has been pretty notable there, and I think has led to a little bit of technical weakness within some of the space. I mean, it's definitely some areas areas still holding up. But if we want to move on to pull up some of those, GLD has a pretty interesting chart. Gold last several years has been one of the strongest assets out there in the market, but recently has not been the case. I mean, it is on quite of a downturn from some of those previous highs. If you give me a moment here, can show you it's actually down, I think, about 25% this year from its highs. Go here. Previously set that high right about in January, and since then, has had some buy signals, but now with intraday action today on its fourth consecutive buy signal, is nearing
Sell
some
signal.
support there.
Just
Yeah,
remember that.
sell signal. Yeah.
All good.
Um, and then nearing some support there at about 365 with the bullish support line there about 33.5. Could potentially slow down here with it also being a bit oversold, but definitely some pretty notable changes for gold here and some of those commodity names.
Yeah, and we had really seen kind of early in the year that $400 level, and really translating over to gold, that gold continuous chart, that $4,000 level being pretty significant near-term support. It really moved right through it earlier this month, and ultimately, to your point, we've now seen this pullback, or at least kind of fall, materialize to the point that we're oversold, but now testing pretty significant long-term support. So another potential situation where you may get some consolidation around these lows, or maybe a potential rebound from here. Now, if you were even to get a type of rebound, you've got now significant resistance in play there as
Yeah,
well.
many
So.
different levels up ahead.
hmm And I think that sort of similar story holds true when you're talking about crude oil too, as well. Whether it's looking at any one of the charts, but CL// being one of the main ones, you now seen it fall down to levels we've not seen since March. Really kind of returning back towards levels that we saw pretty consistently in 2025 from there. And last week we saw a pretty significant violation of support there in that upper $70-$80 level. So have now sort of seen what was a pretty significant rally, what had sort of given some initial thoughts, will we see this continue? It has now sort of helped answer that question of, what, we've now seen the break. We sort of returned to at least what was beforehand more normal territory. So we're worth providing context that now are both probably in what were considered a little more normal territory for what expectations might have been. But nonetheless, both coming down to points where support's being tested again, you're having move into oversold territory. So similar to those positions that we were watching a couple of weeks ago, looking for consolidation there, we're now seeing if these consolidate or if downside continues further.
Yeah, there is some support here at about 64, but broadly speaking, is quite the downturn from some of those previous highs we saw there in March. And some of this weakness and decline, I think, also has bled over into some of those more energy and material-based sectors. I know in our Dolly rankings, previously energy was number one there briefly, but technology kind of easily overtook that over the last month, and energy now back down to the fourth spot within Dolly. Pretty notable decline in signals, over, I think, 100 signals down from where it previously was, or 90. So seeing some interesting movement here in the sector rankings as a result of some of those commodity and material changes. And then basic materials themselves, I know previously saw some leadership out of those precious metal areas, especially in 2025. But with those groups kind of suffering due to some lower gold, especially some of those precious metal miners and metal miners in general, have seen basic materials also fall from about the fifth spot to the eighth spot, and then energy again moving from about first to fourth here with some of the downtick here. And then again, see some of these risk on areas besides those at the head of Dolly here: technology, industrials, communication services, with some of those risk off areas there rounding out the bottom of the rankings. Anything kind of pointing out here to you, David?
It'll be interesting over the coming weeks if folks maybe haven't already noticed it just yet, that difference between your third ranking and your eighth ranking sector is only 20 signals. So the potential for change there in the middle of the rankings there
Mm-hmm.
is ripe. We've already seen some of it happen as well, with communication services upticking, financials there as well, healthcare getting some of that benefit where we're seeing breakdowns in energy, utilities, and basic materials. So it'll be interesting to see in the next coming weeks what emerges out in front there. If we see some of these areas that have been beaten down really recently get a
Mm-hmm.
little bit of a rebound back, or really we've got a lot of questions when things are sitting right there in the middle for sure that'll need
Yeah, I
to
mean,
be
that is some
answered.
pretty tight middle of the pack action there. I mean, not often you see so many sectors and just a few signals of each other. So definitely could see some major switch ups here over the next couple of weeks or months, making it all the more important to kind of keep an eye out on that potential movement.
Yeah, and it'll be along with, elsewhere within the rankings we're seeing commodities seeing a pretty good mix up this week, which is another one that we've seen shift quite a bit in
Mm-hmm.
recent years. So another one that, while not primary part of our sector conversation, is one that we've been keeping a close eye on to see what emerges from a leadership standpoint there, because really our two recent most leaders, at least looking back, taking a step back a couple of weeks ago, our two most recent leaders for the prior couple of years are now sitting near the bottom. So,
Mm-hmm.
seeing a little bit of a different changing of the guard there. But, for the time being, we still see that offensive tilt with many of the asset classes, uh, such as international, domestic, and commodities sitting up there near the top. But we always continue to monitor those, and
Mm-hmm.
it's something that I'm sure will be discussed multiple more times throughout 2026. But for today, I would imagine we have touched on quite a bit to give folks enough to really ponder over the next week, and we'll see what transpires for the rest of the week here. Trevor, appreciate you joining me on the podcast here again
Yeah,
virtually,
pleasure as always. Thank you for joining me.
and hope everyone enjoyed this. And as always, stay tuned for next week's podcast, and thanks again.
Take care, everyone.